Good afternoon, folks. Today we have a meeting with a mortgage specialist. Maybe you have some questions that he might be able to answer. I'll be asking the questions. I have quite a list, but I don't think we'd be able to cover it all in one go. So Petro, if you could please introduce yourself, tell us a little bit about yourself.
Yeah, so my name is Petro. I'm a mortgage specialist in one of the bank for a long time, for about 5 years. I already seen good times in the market, like crazy busy and crazy slow. So I would say quite an experience behind already.
Okay, so I guess with the first question is, how can you help your clients to determine how much they can afford?
Yeah, so in today's market, which is like super different from what we had half a year ago, we need to understand, like, client who's looking to buy needs to understand how much he can afford. So that's why realtors always asking clients to get pre-approved, which is really smart idea, because the number we will give right now to clients is going to be different from used to be half a year ago due to interest rates we have right now. So based on today's rates environment, I would say like that, if client has low debts, visas, like small balance on line of credit, no big car payments, good credit, and is looking to buy something on a price range 450, which is kind of common price for Edmonton already. We are talking about annual income 110 plus, 110,000 gross family income and more. Depends. It all depends on the credit bureau. Depends how much debts on like payments client makes every year, every month. And also some banks using different income structure. For example, bank I work for, we are using child benefits as an income. Some banks don't do that. So it's always great idea. Absolutely talk to the realtor and after come to the bank and just get an idea about how much you can afford and also how much it's going to cost you. I just recently had a client like a couple days ago. So we're talking about 450, talking, yeah, it's going to be close, income is fine, down payment in place. But when it came to how much it's going to be per month, just, client says, okay, what about 400,000? How much is going to be per month? So sometimes it's not just, okay, what is your max, but also, can I afford this
What
payment?
you can afford now.
Yeah, which is today kind of, when I'm calculating the payment today and compared to what we had last year on the similar mortgage amount, is a big, big difference. So again, like, it's due to interest rates we have right now. We hopefully on the top, and hopefully we will get some different trends. Like, probably interest rates will start going down, but for now we still have high interest rates.
Okay, so when we talk about interest rates, how long can you hold that interest rate? So say when you give someone a pre-approval, I take over, we can go start shopping. How long can you hold that rate?
Absolutely. So in my financial institution, it's a 4 months, 120 days. I know that some institutions have like 90 days. And so in my case, when client comes to me, we check credit history, we collect income documents, we provide pre-approval, which helps to keep rate for 120 days. In case if rates are going up, client protected because client has lower rate. In case if rates will drop during this time, of course, we will offer better rate to client. We also have, in case if client is building house with a builder, and possession would be in 10 months or 12 months. We also have special rate holding period for like 10 months for this product. And it also makes sense. For example, like last year when rates were going up, And if clients started building with a builder at that time and locked on this 12 months holding period, now client is getting good rate compared to what we have on the market. So yeah, pre-approval is super important to understand, like what is the situation, and also gives like peace of mind about payment rates, of course, but it doesn't guarantee that if client will lose a job until home will be in place, you have offer in place, and suddenly you don't have a job. No pre-approval. So pre-approval is based on current income situation, and we will double check when offer will be accepted that client still has the same job. Depends how long it's going to go from pre-approval time until live deal. So
So
yeah,
basically, yeah, people have 4 months from date of their pre-approval to move-in date, and
yeah,
that's when their rate is locked. Or with new builds, then you can hold it for until the home is
yeah,
basically built.
yeah,
Because yeah, usually for
yes,
brand new homes, it's less than 12 months. Some builders are shooting for 8, but yeah, in these conditions, not easy to do that. Okay. What would you tell clients about porting their mortgages
yeah.
or jumping ship, let's say? Like, what the situation is there?
Yeah, so today, if client has a mortgage on existing property and is selling, and I assume rate is good compared to what we have today, it's super smart idea just to port this interest rate to a new property. For example, let's say a client has a duplex and has a mortgage 300K, and let's say interest rate is at 2.5 or 3%, and client is buying on the same time house, and new mortgage amount would be half a million. So we'll blend old money 300K with the new money 200K on new interest rate, and it's going to be something in the middle. But the thing is, if client is looking to port the rate, client has to come to his financial institution. So if it's a mortgage in TD, client has to come to TD Bank because we're talking about same product, interest rate, and so it has to be the same bank. And it's not via porting mortgage, we're porting interest rates. So we need to approve client, we need to qualify client for new money. We need to check income, credit score, probably do appraisal on the property. It depends on the situation. But it's not just we're just porting mortgage. Yes, we're porting interest, but we need to approve you fully based on today's conditions.
Yeah. Okay. Well, that does make
But
sense.
also, Sasha, why porting is so important? Because it gives low rate, and low rate it's also more money to the client because we're still having this stress test when bank calculates payment based on +2 interest percent. So I mean, porting rate, it also means that we give more money to client. We can qualify for a higher mortgage. So
Yeah, that's what I hear. Yeah, stress test is not going anywhere, even if the
not yet. We
not
have it
yet.
in place.
So yeah, some people would have to basically qualify for like 7 or 8%, so their income has to be pretty high.
Yeah.
Yeah, that's not gonna help a lot of people, but yeah, I don't think we're gonna see massive changes anytime soon here. So
I don't think so. I don't think. Actually, Sasha, one more point when it comes to the porting, because it's kind of lots of clients missing the possibility to port insurance premium. Let's say family bought 2 years ago house with a 5% down payment, well, down payment below 20%. So eventually there is a mortgage insurance. And if we don't like this area, we need a better area because of school or whatever. So they selling a house which they bought 2 years ago, and they moving into a new house. So if they don't have 20% for the new house, they can easily port insurance premium they paid 2 years ago to a new property and save a lot of money. It saves a
and yeah,
lot of money, and sometimes I just don't pay attention to that. Sometimes client doesn't pay attention, but again, it
yeah,
can be ported. And in this case, it doesn't have to be the same bank. It will be the same insurance company, can be same CSA,
yeah.
Canada Guarantee, But in this case, it can be different financial institution. Just good reminder to the client, if you just recently bought, selling and buying again in a couple of years, keep in mind that you can save a lot of money just porting insurance premium to new house.
Yeah.
From
So we're talking about blended rate. We're talking about mortgage insurance.
premium.
Then yeah,
it saves a lot of money. It saves. That's why we have this in banks. We have this position which is called mortgage specialist. Eventually, we can miss something because we're busy all the time, but usually we try to offer client as much as we can to save money to the client.
that's the first thing I tell my clients. Pre-approval is the most crucial step in a home buying process. If you don't have pre-approval, you're wasting everyone's time. That's the bottom line of it. Pretty much, yeah. And especially if you have a complicated transaction like a sale and a purchase and porting, then yeah, without talking to your mortgage specialist. And I cannot stress this enough, mortgage specialist, not a financial advisor at the branch.
Actually, Sasha, one more thing about porting. Each financial institution has a difference between transactions. So let's say in my bank, when you're selling and buying, or buying and selling, the difference between these two transactions, in order to keep previous rate, has to be below 120 days. Has to be up to 4 months. No. So let's say, because I always say when client wants to sell and buy, I always say you have to find good realtor who will manage two transactions pretty much on the same time, not on the same day, but on the same time with a maximum difference between two closing dates up to 4 months in my bank. But I know that can be 1 month, can be 3 months. So again, client has to check porting, how much time I have, what's going to be my blended rate. So yes, again, coming back to what you said, pre-approval.
Yeah, selling is not the hardest part in that case. It's having all the gears interconnect and work together. Sale, purchase, and porting. Yeah, that's why you have to build a team to your financial institution, your realtor, and your lawyer, because everyone has to be in the loop of basically what's going on. Yeah, and in markets like today, we were in balanced market, we're no longer are, because our absorption rate is so low. It's like, depending on the property, between 15 and 20% right now. So we are already in buyer's market, where buyers have all the leverage, and they know that.
Especially we live in Alberta, people moving to Alberta from other provinces, despite interest rates, market is hot.
Yeah, because they can't afford a whole lot in Vancouver or Toronto. So yeah. I guess on that, prices will not be dropping anytime soon, because the demand is gonna keep going up, which is based on that.
Which is I know some clients waiting that prices will drop or whatever. I would say like that, if you need a house, look for it, because who knows? You just don't know how market will behave this year.
Yep. Oh yeah, no one's got a crystal ball. All we hear is predictions. Yeah, predictions don't really help us. Well, thank you so much for answering my questions. And if anyone's got any more, they can ask them in the comments below, and we'll both be connected to this video and can answer all of them for you. Stay tuned for more information coming up, and thanks for watching. Petro, thank you for introduction and answering our questions.
Sasha, appreciate your time. Thank you for inviting. Thank you.